In this video, we're going to use price action rules to help us navigate the market and identify high probability setups. As a price action trader, I'm only working with the candles on the chart, and this means that I have to follow the shortened trends. I always have to identify a channel. There's always a channel present for every single price movement. Why is that helpful? Because it can help me predict where the market's going to go or where I can expect reversal, because I have a downtrend, break, new extreme. This means downtrend played out, and now I can expect reversal, and we have very nice market geometry. You can see the price action is working higher, and this channel has a lot of confirmations. Candles fit perfectly inside. So right now the short-term bias in this market is bullish, and market keeps correcting, and we are breaking this channel. This means I'm not expecting reversal. In fact, according to trendline rule, new extreme is going to be tested 8 or 9 times out of 10. I have a new high, so what's going to my mind is the second attempt, first entry long, pull back, second entry long. I want to see second entry long at the EMA to test the new high. I'm following the short-term correction because there are short-term trends inside the main one. We're breaking below EMA, and this is not good. There's also doji signal bar. So because we have two legs down but they're below EMA, I want to see right now push above EMA and a high-low confirmation setup above EMA like this, because I expect new high to be tested. So can I get a high-low? Okay, nice push above EMA, no high-low, and uptrend already played out. So I'm going to mark it with the break and new high, and right now everything on my chart played out. And since this is a trend range, because this is no trading market, we have spike down, spike up, I'm just going to expect trends to pivot quickly, and lo and behold, we have nice sharp spike below EMA, supportive indicator only to M-bar EMA, and once again I'm going to redraw a brand new channel. So this is what I do. I just follow the most recent structure. Once again, new low right here, first attempt to sell. Even though this is an inside bar right here, you still count it as first entry short because we broke below this low. Okay, new low here, break below. It's an inside bar, but you still count this as a first entry short. Pull back. I want to see second entry short because this downtrend is new low. I technically have a second entry short here, but it's a little bit close to these lows. Not full at the EMA, so not ideal setup just yet. Break, push to new extreme, and downtrend played out. So I'm going to mark break, new low. And once again, I'm going to redraw a brand new uptrend working higher. Something like this, spike above EMA. And once again, we're breaking the channel. So you already know, there's a price action trader, you get the advantage over other traders because you know what to expect and what the market is most likely going to do. Okay, you follow these short-term trends, the trendline rule. Right now you expect new high again. I have a new high, first entry long, first attempt to go long, break here, failed, and now we have second entry long. And in fact, this is also new low, first entry short, pull back, second entry short failure. There's going to be break above this bar. So we actually have a double high probability setup in one, which is fantastic. I was so close to taking this. I wanted to see a little bit stronger bar, bullish body closing a little bit higher because there's some short-term trend line. Now, this trend line is most likely not that significant because it's such a tiny move. Already, this uptrend is so tiny. Okay, this uptrend is so short-term. So any short-term channel inside is going to be also tiny. So I'm not expecting new extreme, highly unlikely we're going to get new high. But just in case, you really prefer some stronger bullish close. So if you have some strong bullish bar, you can go long because you have two setups in one. Not just second entry long, but first second entry short. Right now, I have to mark it a little bit more advanced, a little bit more aggressive. But you expect new high, double high probability setup at the EMA. Decent enough. Break, new extreme, uptrend played out. You wouldn't have this key level at this point. But now I can start predicting that the trend range is getting smaller. Once again, I'm going to redraw the downtrend. I still expect second entry short. I still expect the same thing we had here. New low, first entry short. Okay, but we're breaking above EMA, so I got to be now a little bit more attentive. New low here, no break below, no reveal. First entry short, failed. Congestion, congestion. Okay, so I'm not participating in a congestion above EMA. What's going through my mind is a lower high breakout pullback like this. Because I expect, once again, new low for this downtrend. Okay, trend ranges are very predictable. You're drawing channels tight and you expect every single time the trendline rule. You can also expect the measured move down, one leg here, second leg here, just like you had here, one leg up, second leg up. Market moves in pairs of twos. So you can see there is reason to every single movement in price action. Everything makes sense. There was no lower high breakout pullback. Now I'm going to move the support a little bit higher to a bounce here because the trend range is getting smaller. Now this was tempting long after breaking new extreme, but this is an inside bar and not a good one. If you have two legs down, breaking new low, you're far from the EMA. EMA acts as a magnet. In trend ranges especially, you expect prices go closer to it. You're quite far away from it. You can see there's quite significant gap between. This is significant distance. But this is an inside bar, not a good one. I can't take it. Okay, we broke higher. Significant push above EMA. I don't think we can take high-low because this push was so strong, so significant. You can take high-low somewhere around this area to ride it back to the EMA, or maybe right after you push above EMA, but you already pushed so far up. It feels like the move is too overextended. You're also not flat the EMA with the body. You really prefer the second entry long for the second entry short. You prefer something like this. Once again, you expect new high to be tested. You have the double high probability setup here. New high, first entry long, second entry long, new low, first entry short, second entry failure. But this is an inside bar. We broke below EMA. So once again, it's a shame. If this wasn't an inside bar, if this formed a little bit better, great high probability setup, repeat pattern of this. But I can't take inside bar, break a new high, uptrend played out. And everything on my chart right now played out. So what I'm going to do is I'm going to be patient because everything played out. Let's see what's going to happen. I can't take anything because in trading ranges like this, I follow the short-term trend. So I either follow the short-term trends and I look for second entries at the EMA, or I wait for prices to reach these extremes and buy low or sell high. Okay, once everything plays out, I'm not taking trades in the middle. That's where your edge as a price action trader is dissipated, especially if you're starting out, and you can get chopped to pieces in no man's land like this. There's no bias, no edge. So I'm just mainly being patient here. It's tempting to draw something wider, but you know, we were in a trend range the whole day. This is very healthy trend range, flat EMA, consistent price swings. I don't like anything wider just yet. Just gonna be super patient here during these short-term channels. There's no reversals. I have to wait a little bit more. I'm not going long, I'm not going short. Everything played out. Okay, I was expecting there's some wider channel, but we broke lower instantly. Okay, more trend range behavior. Can I go long? This downtrend is in play. Spike down is in play. So you cannot be buying at the bottom. Break a new extreme. And this is interesting. This is sort of like a visual second entry long and you're quite far from the EMA. This is an inside bar, but you have matching lows. You're buying at the bottom. According to range rules, you want to buy low, sell high. Now there was tiny bit of bearish imbalance, but not that significant. It still feels pretty much like a consistent trend range, and you're at the very bottom of the move. It's some fell breakout variation, so not a bad trade you can consider if you're more advanced. Once again, had there been the break below, would have been a little bit stronger. So fell breakout, you want to buy low, sell high. Most breakouts will fail. Push above EMA, high, low, a little bit sketchy. Can I get a felt second entry above EMA? And I have felt second entry short above EMA. Perfect reversal pattern. This is a great high probability setup because it's above EMA, it's inside the channel, it's a reversal pattern, downtrend played out. We're coming out to range lows after fell breakout. This is a felt second entry short, indicating reversal to the bullish side. Great high probability setup, great momentum. Break, new extreme, uptrend played out. Once again, two-legged variation like this, very powerful tool to observe when you're navigating a trend range. Okay, already breaking new extreme, so downtrend played out as quickly as it started, so everything played out once again. So I'm not really looking for trades at this point. Everything played out. First entry short means nothing. Okay, we're breaking above EMA, and now because downtrend has a couple legs to new low and we're breaking above EMA, I'm not going to draw a channel tight like this. I'm going to draw a channel wider because in trend ranges I expect trends to pivot quickly. Okay, I'm not arguing with the trends. Wider channels are unlikely, especially in such a consistent range like this. So because downtrend played out with push down, another push down, you push above EMA, it makes sense to expect another new trend beginning. If I draw it tight like this, I'm more expecting this to be correction and downtrend continuation. I'm not expecting downtrend continuation because I expect trend to pivot. So push above EMA and I want to see something like this. I basically want to see a repeat pattern of this. It looks similar. Leg down, breaking low, leg down, breaking low, felt second entry above EMA, felt second entry above EMA, and we have felt second entry short above EMA again. Great high probability setup. The signal bar is a little bit weak, but not that bad. There's nice tail at the bottom, decent body. The tail at the top is not as significant because the signal bar is small. You can see 1.75. So this is smaller risk. Great felt second entry short, repeat pattern of this. Okay, now that we have a new trend established, I'm looking for second entry long at the EMA to test the new high again. So you can see it's fairly simple. I just follow these short-term trends. I'm looking for new extremes, taking reversals or second entries at the EMA. Okay, this is a problem because we already have micro double top count reset. which means the new high is almost in place. But more importantly, I still have to reset the count. I was looking for second entry long. If there was no double top, this would be actually a great trade because you can also combine it with failed breakout like this. You have a congestion, failed breakout, most breakouts will fail. You expect new high. It's a visual second entry long, those two legs are there, but you have the micro double top. You know, this is quite a short-term weak uptrend in a trend range. I really feel like we need that second entry long, the halo. If you took it, I can see why it was super tempting. Super tempting, signal bar is great, failed breakout, you expect new high, visual 2 legs down, but it's just not the greatest once you have the micro double top because you already have almost new high. Can I get some high low? You have horrible bar. It ended up working, push to a new extreme. Okay, uptrend played out. Okay, you can't really take this because you already have technical new high. You can see you have new high. If you have this halo here, you can go long here because you'd also have it as a breakout pullback to this congestion, but you already created new high here. So you mainly treat it as a first entry long after uptrend played out. And this was interesting. Actually, I had my resistance a little bit lower because at this point you're getting bounce here, bounce here, bounce here. I want to have more bounces. So I'm going to move it somewhere here to get bounce here, some tail here, bounce here. And this was actually decent lower high. You can see one bar, second bar, lower high. This is way too late, so we can't really take it, but we can mark it only educational wise. But this was a great trade if it's not too late, but market's about to close, so you can't really go short. Lower high at the range highs, uptrend played out, and now the market is about to close. This is the overall structure for today. It was a very predictable price action, clear trend range. You expect to buy low, sell high, and most breakouts to fail. In the meantime, you're following a shortened trend and expecting second entries at the EMA. So great price action, few good setups. This failed second entry short is great. This one is nice as well. It's a shame we had micro double top, count reset. Otherwise, this is a great setup as well. Nice lower high here. A little bit more aggressive setup here because the signal bar was weak. But overall, decent price action. It was fairly slow, but very predictable. So even though trend ranges may be difficult for beginner traders to navigate, trend range like this is easy. Hard trend ranges are those where key levels are not consistent. But once you have consistent key levels and price action really is oscillating between these key levels up and down, you just follow the short-term trend line rule and you expect trends to pivot quickly. This is fairly easy trend range. What's hard is when the key levels are so all over the place, they're inconsistent, it's hard to buy low and sell high. In those ranges, you need to be a little bit more patient. Overall, decent price action. I hope you had a good trading day. I hope you find the video helpful, and I'm going to talk to you next time. Good luck in your trading.